Guys, sure you had a great day. Uh, I had to make this call because I wouldn't be available tomorrow. I won't be available tomorrow morning. That's because my laptop charger just got back, and I might not be able to get it tomorrow morning before 10 a.m. So, since I'm on now, I decided to hold this session to come for this meeting. You're welcome. You're welcome. So let's do a quick look on. Let's do a review and also an outlook of what we should expect in the market tomorrow. Okay. If you join today's session, I told you guys my bias on G and it played out as expected. Okay. I told you guys after the formation this and demand, this would have been the right price to buy and to sell GBP USD. This would have been the best entry. By the time I checked the chart. I opened the chart this morning. I think it was trading around this area or this area. And I told you guys we should wait for price to pull back to a premium area before going bearish. So let's go down to lower time frame. Let's go to 1 hour. So I suggested I wait for price to pull back to a let's go to 15 minutes to a premium area before we go bearish. If you apply, I did suggest that you apply Fibonacci from this swing low, then this swing low to this swing high, and wait for price to pull back to a premium level. So price pulled back, let's see, so premium area, and we had what looks like a fitting star here. You can see, so this would have been the best entry for GU today. This would have been the best entry after the formation of this fitting star. So one would have entered and sell straight from this point and sell stop loss here at this level, 40 pips, keep it out of this high. So set your stop loss 40 pips here and you would have made 80 something pips profit on GBP USD. For those who executed the trade, congratulations. Okay. So my bias on GBP USD. Now let's see how today can close. Okay, that will determine the trend for tomorrow. So today's candle close, I think what we have here is an engulfing pattern. I think I'm all right. What we have here is an engulfing pattern. So I'm expecting more bearish move on GU tomorrow. I'm expecting more bearish move on GU tomorrow. What we have here is an engulfing pattern. Okay. So if you're not in this trade, you don't have a GU trade open, I would suggest you wait for price to pull back. Wait for price to pull back before you sell. Entering and sell at the current market price is at a very high risk. It is at a very high risk. So I would suggest to wait for price to pull back. Let's see. Okay. You can wait for price. Price is likely going to pull back. As you can see, the fair value gap has been created here. The fair value gap has been created here, and the price is likely going to pull back to fill this fair value gap, or if we pull back to test this support that was broken here. Okay? So this will be the best area to join the trend. These zones will be the best zones to consider selling GBP USD. And if you decide you want to sell from the current market price, your stop loss, let's see the risk involved. If you are selling from this point, your stop loss will be at this point. So you would be risking close to 100 pips on GBP USD. The risk you will be taking on GBP USD close to 100 pips. And what will be your reward? The first target, this will be the next area of liquidity, this previous low. You can see, so from this point, if you decide to sell from this point to this point, it will be your first target. This is just 73 pips, 73 pips, and you can't be risking close to 100 pips for 70 something pips. That's a very poor risk reward. So I would suggest to wait for price to pull back to this area, to this zone, before you consider going bearish. Now, GE is likely, like I said, this will be the first target, the GE, and this will be the best target, the GE. Okay, so that's my take on GE for tomorrow's market. Okay, you should expect price to pull back to the zone, okay, before going bearish. I hope that is clear. I hope that is clear. So that's my take on the. Let's move to the next one. Gold. Let's look at gold. So you guys in the morning that gold is bearish. We should wait for price to pull back to signal okay. What I did in the morning was to apply a Fibonacci to this low to this high, and I told you guys that you should patiently wait for price to pull back to a premium. Let's see. So this happened during the New York session. The New York session. Okay, price pulled back to a premium, so one would have executed a sell trade after the formation of this candle that looks like the spinning top or this engulfing candle. This is an engulfing pattern. This bearish candle engulfed this bullish candle. So that would have been the best entry for gold. And if you had executed that trade, okay, you would have stop loss few pips above this level, let's say 70 pips. So 70 pips, and if you're risking 70 pips, your first TP should not go below 100 pips. 100 pips, your first TP should not go below 100 pips. If you had executed this trade, you would have made close to 107 pips on gold. You would have made 107 pips, 118 pips on gold. And I'm still expecting a bearish move. Let's look at the daily. I'm still expecting more bearish move on gold. But let's see how today's candle closed. How, my face is why you mute your mic.
I would say what the poor for in it was
This using the iPhone 14 Pro. Is that Max? Max, is that you? Okay, so on gold, let's see how. Okay, so this is candle for today's market. Yeah, today's market. The candle is yet to close. Okay, so this is gold, and you can see today's candle closed as this is a spinning top. This is a spinning top. Now, after the formation of the spinning top, I believe you can hear me. Can you hear me? After the formation of this spinning top, if we go down to 4 hour and we are able to identify a valid bearish reversal pattern, if we are able to find a valid bearish reversal pattern on 4 hour time frame, then we could consider going bearish on gold tomorrow, the 26th of September. Tomorrow, 26th of September. So let's see what we had on 4 hour. On 4 hour, so you can see these 6 candles makes up one daily candle, right? 1, 2, 3, 4, 5, 6. These 6 candles you have here makes up one daily candle. So you can see here we had, this is a shooting star. This is a shooting star. Okay, this is a shooting star, which indicates the trend from bullish to bearish. And today, a support was created here. A support was created here. This is a support. And also we had another support here. You can see. Okay, so if you are considering selling, my bias for gold remains bearish. It remains bearish for tomorrow's market. And before you sell, you should wait for price to break this support. wait for price to break this support before you sell. That is my take on gold. That is my take on gold. Sell after the support is broken. After the support is broken. Now, if we go down to lower time frame, after the formation of this pattern here, it is likely a fair value gap was created on maybe 15 minutes or 5 minutes. And that could be the reason for this pullback. Okay, that could be the reason for this pullback. Also, this support that from here could be the reason for this pullback. Are you getting me? It's either this support or there's a fair value gap that was created after the formation of this pattern. Let's go down to 15 minutes. Let's see if a fair value gap was created. So you can see on 15 minutes, the fair value gap that was created here. And that could be the reason for the pullback. Has that gap been filled? Yes. You can see they have filled that gap. You can see that gap has been filled. You can see if this was London or New York session, I would have executed a sell trade after this candlestick closed below this gap. After the gap got filled and this candlestick closed below it, if this was New York or London session, I would have executed this trade. But right now we are in Asian session, and I don't trade Asian session because volatility in Asian session is very low. It's very low, so I don't trade the Asian session. So patiently wait for price to probably break this support. Tomorrow price could range between now and London session. Yeah, price could just be in a range between now and London session. Okay, so if by London session this support has not been broken, I'll patiently wait for price to break this support. Or if I see a good bearish reversal pattern around this area, I will go bearish on gold. I hope that is clear. Please, I would like to know the person that is using this iPhone 14. Is that Max? Is that Max? Mr. David, good evening. Sure you had a great day. Mr. Joseph, good evening. So that's my take on gold. Gold, my bias for gold is still bearish. It is still bearish. I hope that is clear. If there's any instrument you want us to analyze, you want us to look at together, please let me know. I wouldn't be available tomorrow. That is why I called for this class. My laptop data got bad, and I'm not sure I'm gonna get another one before 10 a.m. tomorrow. So I think I'll be going to Ikeja to buy on maybe on Friday. I think I'll get it on Friday. I'm not sure I'll be going out tomorrow. I'm not sure I will be going out tomorrow. Since I'm on and I still have some still a little bit tight, decided to just call for this meeting. Okay. So if there's any instrument you want us to look at together, please drop it in the comment section. Okay, Mr. Baristos. Good evening, sir. Good evening, sir. Okay. So that's my take on gold. I'm looking for sell tomorrow on gold. So let's move to the next pair. That will be euro. Which other pair do you want us to look at? Please let me know in the comment section. USD card, okay? See USD card. My bias on USD card for this week has been bullish. It's been bullish. My bias for USD card has been bullish for the week. Okay, I just analyze gold now. I just analyze gold. Okay, let's see. USD card. So let's start with the daily. How did today's candle close? Okay, so you can see it was strongly bullish. Today it was strongly bullish. Okay, so first thing they did today was to clear liquidity. I think that could be the purpose for that bearish move we saw earlier on in today's markets. I think the goal was to clear liquidity residing this previous low, and that they have achieved. They have achieved that. So let's go down to 4 hour. Let's see the pattern that comes on 4 hour after the formation of today's candle. It is a strong bullish candle. So you can see on 4 hour, what do we have here? This is a bullish reversal pattern. Liquidity got cleared. We have a relative equal low here, and liquidity got cleared. And the pattern we have here, we had a doji here, we had a spinning bottom. Now this does not it's not a valid, okay, it's not a valid inverted hammer or a spiraling bottom. So what do I do in this case? Um, I need to go down to 15, no, 1 hour. Now I need to, after the formation of this, what's it called, doji, I'm sure a resistance level was created. A resistance level was created on maybe 1 hour or 15 minutes after the formation of this doji. So before I buy, because this pattern is not a valid bullish reversal pattern, I would wait for price to break that resistance that was created before going bullish. So let's go to 1 hour. Let's see. So let me go back to okay. So after the formation of that page, let's see on 1 hour. So you can see the resistance that was created. This is the resistance. This is the resistance. These four candles you see here, one, two, three, four. One, two, three, four. These four candles on 1 hour makes up that doji candle on 4 hour time frame. These four candles, one, two, three, four, makes up that doji on 4 hour time frame. So I would wait for price. This is the resistance that was created. And if you go back here also, we had a little, not a strong resistance, but we had a resistance here you can see. So I would have to wait for price to break that resistance. The breakout from that resistance is what confirms that we have more demand than supply. Okay, so one would have entered buy after this candlestick closed above the high of this resistance. But if you look at 1 hour, here we have a valid, what's it called? A valid inverted hammer on 1 hour. So after the formation of this candle on 4 hour, after the formation of this bullish candle on 4 hour, like I said, this is not a valid inverted hammer or spiraling bottom. It is not valid. But if we go down to 1 hour, you see here we are able to identify, you can see an inverted hammer indicating change in trend. So all we need to do is wait for price to break. This was this resistance that was created before the formation of this inverted hammer. So all we need to do is wait for price to break out from that resistance. You can see when price got to this resistance level, there was a strong rejection from that level. See, there was a rejection from that level. Then this candle was the first candle to break up from this high. So this would have been the best entry for USD card. That would have been the best entry for USD card. And let's see how far it has done. Let's see from this point. This is where we ought to have entered by. Now it is trading at this point. This is about 51 pips, and we should have entered from this point. So if we are buying from the current market price, though the trend is still bullish, the risk will be high, right? To buy from this point, from the current market price, we will be risking. If we are buying from the current market price, our stop loss will be at this level. That's about 63 pips. 63 pips. And for me, that risk is too high. I would want to see price pull back to probably 50% Fibonacci level before considering buying. Okay, the most recent swing high and swing low. So I want to see price pull back to at least 50% equilibrium level. Okay, I want to see price pull back to 50% equilibrium level or to a discount area before I would go bullish on USD card. When you open the chart, the first thing you need to look at is where price started moving bullish or bearish, where price is coming from, where it is at the moment, where you also have entered the market, and where is the price heading to. Those are the three things you need to identify when you open your chart. Where should I have entered this trade? Okay, you know you should have entered this trade at this. If you open your chart and the market is trading at this point, accept that you have missed that trade. Okay, accept that you have missed that trade. Another thing you can do is if you still insist on entering the trade, now let's assume you have executed the trade from this point. Let me take risk management. Let's assume you have entered the trade from this point. Your stop loss, let's say you use 20 pips as stop loss. And on every trade you execute, let's say your risk is $20. Let's assume your risk is $20. If you had executed the trade from this point, okay, so let's say you use 20 pips risk, your risk will be $20. Now, if you insist on executing the trade from this point right now, the risk is 50 something. right? 50 something. So maybe if you had entered from this point, you would have used 0.1 lot size. 0.1 times 20, that would be $20. Now the risk has increased to 60, let's say 60 pips. So you would have to reduce your lot size if you insist you want to take this trade. So since the risk is 60 pips, you have to reduce your lot size to 0.03 lot. That would be $18 loss if the trade goes against you. You can't use 0.1 at this point because if you use 0.1, you're going to lose $60, which is 3 times the risk you're supposed to take on every trade you execute in the market. Are you getting me? So that is it. And if you buy from this point, first target, you can see is about 63. So that would be like a risk reward of 1 to 1 if your stop loss is here. The first target, this is the net area of liquidity, this high. The net area of liquidity will be this relative equal high. Okay, so you need to know the risk reward. Are you getting me? You need to know the risk reward. If the risk reward is less than 1 ratio 1.5, you should let go that trade. Okay, if you let go that trade, your risk reward should not go below 1 ratio 1.5. Anything less than that is poor risk and money management. Are you with me? It's poor risk and money management. So going by the candlestick pattern on daily, USD card is bullish. Is bullish. I would advise you wait for price to pull back. Pull back. Probably before London section, price will pull back to Fibonacci 8% level or to a discount area. That is where I would suggest you go bullish on USD card. Also remember, there's a major news for the dollar tomorrow. There's a major news for the dollar tomorrow. Please let me check the calendar on my screen. Forex Factory. There's a news tomorrow. So you might want to wait for the news to be released. From experience, I've noticed that most times when a major news is to be released from the United States, price will just go into a range before the news is released. There won't be a clear direction before the news is released. So if you want to take the risk, it's better to take the risk when there will be money in the market, when there will be high trading activities in the market, which will be when the news is released. So you should just patiently wait for the news to be released. Okay. Tomorrow will be 26th. There's a major news outside. Okay. Powell speaks tomorrow. Powell speaks tomorrow. GDP also will be released tomorrow. Unemployment claims will be released tomorrow. So by 1:30, that will be the best time to trade USD pairs. 1:30 or few minutes before the news is released. If you have a good technical setup, if you see your setup before the news is released, maybe 30 minutes before the news is released, 15 minutes before the news is released, you can execute the trade. You can. If you see a good technical setup, you can go ahead and execute the trade. I hope that is clear. So technically, USD card is bullish. Which other pair do you want us to look at? We've looked at gold, which other pair? So that's my take on USD card. I hope that is clear. Any question? Any question? Any question?
Hello, boss.
Yeah. Any question? Is there any pair you want us to look
Hello,
at?
boss.
I can hear you. Can you hear me?
Boss, can you hear me?
I can hear you. I can hear you.
Hello?
I can hear you. Can you guys hear me? I can hear you.
Hello, boss.
Please, can you guys hear me? I hope I've not been talking to myself since.
Hello, boss. Can you hear me?
I can hear you.
Okay, please, I have a question.
Go ahead.
Okay, my question, you said something, you said when price have moved away from maybe where we ought to have entered the market,
Yeah.
that I think you said we should, instead of using 0.01, like you said, we can use 0.02. I don't know if that's what you actually said, but I think I had something of that nature, and then maybe multiply our lot size by our maybe stop loss, maybe if it is 20 pips. I don't really know how you put that word, but I really want to get that comment. I want to get it better. I don't know if you can come again.
Let me do what I said. Let me do what I said. Now on USD card, I said you should have entered buy at this point, right?
Yes,
Entered
yes,
buy at this point. And if we are buying from this point, our stop loss will be below of this candle or 50 below the
yes,
low of this candle, right? So
yes,
let's calculate the risk. If we had entered from this point, our stop loss, let's just say 20 pips, okay? Let's just say our stop
yes,
loss is 20 pips. And let's assume the risk we want to take on this trade, the dollar amount we want to lose on this trade, let's just assume it's $20, right? So if the risk on the trade is 20 pips, it means we can apply 0.1, right?
yes,
Yes, we would apply 0.1. 0.1, that is 1 pip to $1. Then
yes,
$1 times 20, that will be $20. Now, the
yeah,
market is trading at this point. Some people don't have the patience to wait for price to pull back to, what's it called, to discount.
50%, yeah, discount.
Yes, some people might not have the patience, and it is possible that price will not even pull back to 50%. It can just keep going up. So if you don't want to miss the opportunity, if you don't want to miss the move, what you need to do is reduce your lot size. Since the risk, the market risk has increased, your lot size must reduce. Are you getting me?
Okay,
Because if we calculate, if we decide to buy from this point now, our stop loss will be here. We can decide to set it, at any using low of one of these candles. We can decide to use this low. Well, they can easily hunt for your stop losses. Anything above this low, they can easily hunt for your SL. Are you getting it? So the best level to use as your SL will be this. So if you are buying
okay,
from the market price, you will be risking 65 pips. And since it is 65 pips, you cannot apply 0.1. If you apply 0.1, you're going to lose $65, right?
okay,
What would you do? You have to reduce your lot size. So what lot size would you apply in this case? It will be 0.03 lot size, which is 30 cents per pip. So that if the trade goes against you, you would not lose more than the $20 you have determined or you've decided that you would lose on every trade you execute. So the higher the market is, the lower your lot size. The lower the
okay,
market, the higher the lot size.
okay, okay,
I hope that is
okay.
clear.
Yes, I get it now.
Because everything in market is probability. Nothing is guaranteed. It is not guaranteed that price will pull back to a discount. You understand?
Yeah,
It's not guaranteed. So one can just decide, okay, let me just join the trend instead of waiting for price to pull back to a discount area, which is likely not going to play out. It's probability. Do you get me? So all you
yes,
have to do for you to catch the move is to just reduce your lot size.
okay,
You must
okay,
ensure that you don't lose more than the amount you decided or you determined that you're going to lose on every trade you execute. $20 must be $20, $50 must be $50. So if the
okay,
market has gone
okay,
far from the level or the price you're supposed to have entered, you reduce your lot size.
okay, okay,
How
okay.
that's clear.
Yes, sir, it's clear.
Which other pair do you want us to let me know? Which other pair? Which other pair? Let's look at the I think we've looked at G, right? We've analyzed we've analyzed we've done the sell. The G is still there. So price is likely gonna pull back. So I took a trade on G or AU. I took a trade on AU. Let me see. There's a trade on AU. Okay. Okay, so I took this trade on AU. Yeah, sell it, making some good profits. Okay, on this trade. Now, at what point would I exit this trade? My target on this trade, targeting my risk, I think was around, my risk is 40 pips on this trade. Okay, my risk is 40 pips on this trade. Let me see. I can have my stop loss. Here's my SL. Okay, I just set it 40 pips. My stop loss is, I think I use this high, the high of this candle. Just using my stop loss to be, yeah. I think I just set it 50 pips above this level. So I'm risking 40 pips. My first target is 70 pips. That's my first target. You can see so far it's gone in my direction for 3 pips. So my target is 70. Once it gets to 70 pips, I'm going to close 70% of this trade. Okay. I'm going to close 70% of this trade. 70% of 0.1 will be, I think, 0.07, right? Yeah, 0.07. I'm going to close 0.07 and I'll be left with 0.03 lot size. And that 0.03 lot size target to be 1 to 2. Are you getting me? So that's my target on. So at what point would I exit? Let's assume price decides to, pull back from this point. It can decide to just pull back from this point. At what point would I exit? I would have to work with this most recent. I think this will be the most recent lower high. If a 15 minutes candle closes above this recent high, then I should be out of this trade. So it's either how many pips? I think less than 16 pips for the market to hit 70 pips, right? Less than 16 pips for it to hit 70 pips. So if price pulls back and the 15 minutes candle closes above this high, I'm going to exit. I'm going to exit this trade. Let me use this zigzag chart. So let's say 15 minutes. Okay, on 15 minutes, this is the high that was used to create this liquidity. Okay, then on 5 minutes. So you can see on 5 minutes, this high was used to clear this liquidity. This high was used to clear this liquidity. So if price breaks this high, I should be out of the trade. If 15 minutes candle closes above this high, then the high probability is going to push price up to this area. So I would exit. So it's either price gets to 70 pips for me to close 70%, or price closes above this high, and if it closes above this high, I would exit the trade. I would close the trade. I would. So $1 USD is still, let's see how yesterday can be closed. Okay. Okay. So price tested. Yesterday was strongly bearish. Price tested this support. Can you see? This is what is holding price now. This support, right? This resistance or support. This candle could not close below the low of this candle. If it had closed below the low of this bullish candle, that would have been a strong confirmation for sell. That would have been a strong confirmation for sell. So what should you look out for? Wait for price to break this. If you don't have a trade on $1 USD, wait for price to break this support, this area. If the 4-hour candle closes below this support, you should expect $1 USD technically to hit this low. If it breaks out from this low, then it's coming for this low. That's for $1 USD. The 4-hour candle successfully breaks out from this low, this support, then it's coming for this level, from this level to this level. Now let's see for our what pattern do we have on 4-hour. This is 4-hour. We had a support here on 4-hour. This support has been broken. This support has been broken. We could also wait for price to pull back to the premium level. Let's assume this 4-hour candle has failed. This would be our recent low, so we could apply our Fibonacci from this swing high to this swing low. Wait for price to pull back to a premium. So we have a fair value gap here, 4-hour time. This fair value gap. So price is likely going to pull back to fill this fair value gap before going bearish. Because if you decide to sell from this current market price, your stop loss be at this level, it's 5 pips. That risk is too high. That you have joined from this point, or wait for price to pull back before you join the sell trend. Are you getting me? Are you getting me? I always advise that your market risk not exceed 40 pips. 40 pips. It's very important that you track the trend at its early phase so that your risk reward will make sense. Okay, so on USD card, ask me a question. USD card, if you buy remains, let's see USD card, what where would it head to? Let's see. So where would 4 hour? Okay, okay. Area of liquidity on the daily time. This areas of liquidity. So this should be your target for USD card if you are buying. Yeah, that should be your target. That should be your target. I always say your risk should determine your reward. Okay? Your risk should determine your reward. If the market risk is 30 pips, your first target should be 50 or 60 pips. Once the market gets there, exit. If you don't want to close everything, just close partials. Close at least 70%. Once the market moves in your direction and you make the risk reward of let's say 1 to 1.5 or 1 to 2, close at least 70% of that trade. 70% of the profit, close it. Okay, close it. You can leave the remaining 30% to eat 1 to 2, 1 to 3, or even if it is 1 to 4. Okay, but once the market moves in your direction, you make the risk reward of 1 to 2, close 70%. At least you can close 80%, but close at 70%. Okay, so that's it for USD CAD. I hope that is clear. I hope that is clear. Any question? Any question? Any other instruments you want us to look at? Let me know. Instruments, let me know. DJ still bullish. DJ still bullish. Let's start with the weekly. Okay. DJ has broken this resistance. I said it to you guys on Monday. Okay. It has broken this resistance, and you can see we still have the fair value gap here. So DJ is likely going to come and fill this gap. It's likely going to come and fill this gap. But entering a buy on today, as far as I'm concerned, is late entry. It's late entry. You can't see right now. It's late entry. We are joining the party late. Joining the party late. So let me go to daily. Okay. So like I told you guys this morning that if today's candle had been bearish, would have considered selling today. So you can see today's candle closed bullish. Means we still have more buyers in the market. That's what it means. We still have more buyers in the market. This is what is holding price now. This resistance. This resistance is what is holding price. Because the price has tested that level 2 times. And there's been a strong rejection from that level. If we break out from that level, we get more bullish. So if you want to buy, wait for a breakout, wait for 4 hours to close above that level. And if you are buying, your stop loss should be this low. So let's assume a candle closes above this high, this level, and you try to buy, your stop loss will be about 21 pips. And that's much. 121, but the reward also makes sense. If you have the patience to wait for price to reach this level, 593 pips. Most traders don't have that patience. I don't have that patience. Before price will get to this level, I would have closed some. I don't have that patience because that would take like a week or two for price to reach this level. It might take 2 weeks at least to get to this level. But before it gets here, I want to close 70% of profits before it gets to this target. So the risk is worth it. The reward is also okay. Like I said, I don't like to take anything above 40, 50 pips market risk for DJ. DJ is very volatile. if I'm to trade today, the market risk should not exceed 70, 70 pips, maximum 80 pips for GJ, because GJ is very volatile, very volatile. Okay. Selling, let's see, selling to sell. Yeah, you can see if we go back, this is daily. There was a 50 market structure here, a daily time frame, right? There's a 50 market structure. Now, after 50 market structure, we want to see price pull back to premium. So if you apply our Fibonacci from this swing low to this swing high, sorry, from this swing high to this swing low, we want to see price pull back. Price is still at discount. It's still at discount. We want to see price pull back to premium. We have fair value gaps here. Several fair value gaps are going to be filled at premium. So I think that is where the day is heading to. Okay, so if you are considering selling, wait for price to pull back to the premium area before you consider selling. Yeah, there's a shifting market structure on the daily time frame. There is a shifting market structure. I hope that answered the question, study. I hope that answered the question. Okay. So this was a low, this was a high, right? This is a low, high, and this is a higher low, trying to form a new higher high, right? Trying to form a new higher high. But to go work with break of structure, no break of structure yet. There is no break of structure at the moment. Structure has not been broken yet. It is when price stays this high, we will say there is a break of structure. I get me. Price should break this high before we say there's a break of structure. At the moment, there is no break of structure. There is no break of structure. What we have here is 50 market structure or change of character at this point. From this point. For here, there is no break of structure yet. No break of structure. Okay. Any question? Any question? Is there another thing I want us to look at? Is there another thing? Is there another thing I want us to look at? Let me know in the comment section.
Hello, boss.
Yeah, I can hear you.
Okay. Like you said, this pair now,
Yeah.
there is no break structure yet.
Yes.
What if, like we are expecting price to pull back to the premium before
Okay.
we can sell? And
Okay.
what if price does not pull back? Because at this point now, price might actually decide to drop
Okay.
from this point.
Okay.
Yeah, price might actually decide to drop from this point and come and break this lower
Lows.
low.
Yes.
Yes.
So what should you look
So
at for? So what you should look at for after the formation of this shooting star. If yesterday candle had closed bearish, we would have considered selling, right? We would have considered selling if yesterday candle closed bearish. Now, yesterday candle had closed bearish. Still need to go down to 4 hour, 1 hour time frame or 15 minutes time frame to ensure that there is a shift in market structure or a change of character on those time frames. We wouldn't just jump in and start selling because this candle closed, yesterday candle closed bearish. We wouldn't just jump in and start selling. There has to be a shift in market structure, change of character, break of structure on 2 minutes or 1 hour time frame. This is the daily time frame. This will be our higher time frame. 4 hour will be our medium time frame. 1 hour will be our lower time frame. So on 1 hour, there should be a systematic structure. If you can't find systematic structure on 1 hour, there should be a systematic structure on 2 minutes time frame. That is when we'll consider selling. Now let's go down to 4 hour. After the formation of this shooting star, let's go down to 4 hours. So what do we have here? What we have here looks like a gauge, or you can see this resistance outprice, this resistance on support outprice at this point. After the formation of this on 4 hours, if you go down to 1 hour, I'll be able to identify a shifting market structure on 1 hour. No shifting market structure on 1 hour, no trade, no place at all, because there's no shifting market structure. Let's go to 15 minutes. You see the shifting market structure on 15 minutes. The shifting market structure on 15 minutes was no shifting market structure. Can you see that? There was no shift market structure. Shifting market structure on 15 minutes would have occurred at this point. If price approached below this window, this is the shifting market structure would have occurred, and then you can go here. But as you can see, there was no shifting market structure. Are you getting me? No shifting market structure, so we can't jump in and start selling. But if price drops and closes below this low, then we can start considering, selling. Once this low is clear, we cannot sell. There is no shifting market structure. I hope that is clear. I hope that is clear. After
Yes, sir.
identifying the pattern on the higher time frame, you go down to your lower time frame. You work with at least 3 time frames: the higher time frame, the medium time frame, and the lower time frame. As a day trader, you need to work with 15 minutes. That's where you identify your shifting market structure. 15 minutes time frame as a day trader. Swing trader, work with 1 hour. Position trader, you work with the 4-hour or daily time frame. But as a day trader, your focus be on the 15 minutes time frame. When it comes to identifying shifting market structure, you work with 15 minutes time frame. You are very experienced. You can work with 5 minutes. You can work with 1 minute time frame. Those who are various. Okay.
Yes, sir.
For those who are having difficulty, I would recommend that zigzag indicator. Make it easy to identify what's it called. Um, recent high, recent low. Yeah, that's zigzag indicator. Make it easy. Okay. Any question? Any question? Any question? Any question? Is there any other instrument you want us to look at? I want the system to go up. I need to go so that I can upload the video. Any question? Do you have any question? Is there any other instrument you possibly tomorrow you want us to look at? Let me know. I won't be available tomorrow. I won't be available tomorrow. Any question? Any question? No question. Mr. Deji, no question from me. Max, no question. Mr. Joseph, Mr. Jesus Tokumi. Okay, Mr. Jesus Tokumi requested for good analysis. Okay, let me just do that before I end the session. I think we did that before you joined the class. Okay. Let me just check gold. Like I said, my bias for gold is zero. Let's start with the daily time. How did you see the candle gold? Let's confirm that. Okay, I think it was signing top. Yeah, signing top. Okay, signing top. This is a bullish signing top. This is a bullish signing top. And after the formation of a bullish signing top, we should wait for tomorrow's candle to close. If tomorrow's candle closes bearish, then we could go bearish on gold on Friday, right? Go by the daily time frame. We are working with the daily time frame. So just focus on the daily time frame. We're supposed to wait for Thursday candle to close before we decide to sell. If Thursday candle closes bearish, then we can go bearish on gold on Friday. But day traders, you don't have to wait for the next candle to close. Because if we go down to the next lower time frame, which is 4 hour, we can see on 4 hour that a bearish reversal pattern has formed on 4 hour, right? This is a shooting star. There's a shooting star. So that's an indication that the trend is changing from bullish to bearish. Okay, that's it. Then today we had the support was created here. Support was created here. This candle broke out from that support, so rejection from that level, then created a new support. Okay, so if you are considering selling, as I said, my bias for the week is sell. If you want to sell, you should wait for price to break this support. Wait for a candle to close below the support before you consider going bearish. So, okay, before you consider going bearish. Now let's go down to 1 hour. What do we have on 1 hour? So you can see what we had on 1 hour. We had a support here. Okay, and the previous 1 hour candle, this is a doji, right? And the next candle, the last candle on 1 hour, I think yesterday market is bearish, right? Now I told you that is the reason why price pulled back. Why price pulled back? So, yeah, after the formation of this pattern here, this bearish pattern here, I'm sure if you ever look at, I showed you guys, if you ever look at that is the reason for this pullback. That is the reason for this pullback. Go down to 15 minutes. Go down to 15 minutes. You see if you ever look at perspective. You see if you ever look at perspective here, that gap has been filled. This gap has been filled. So there's a high probability for growth to stop. You can see this gap has been filled. You can see this is the candle. The candle for tomorrow just opened. Candle for tomorrow, Thursday, just opened. You can see there's a gap here. There's a gap. So they are likely going to fill this gap before London session or before New York session. So patiently wait for price, probably fill this gap. And I want to test this area because a lot of competitors will have just sell. Okay, after the formation of this pattern here also, a lot of competitors that have just sell. And where would they have their stop loss? This high. Okay, so there's a high probability they will come for their stop losses before going there. So patiently wait for either price to pull back to this to get liquidity or wait for price to break out from this support before you sell. If you are selling from this support, set your stop loss. Use this high as your stop loss. If you are selling from this zone, use this high as your stop loss. I hope that is clear. I hope that is clear. Wow. But others can hear me clearly, so the issue might be at from your hand. It might be from your hand, Mr. Joseph. Others can hear me clearly, right? Mr. Dixon, you can hear me clearly. Mr. Jason, you can hear me clearly, right? Others can hear me clearly, right? So the issue might be from your hand, Mr. Joseph. It might be from your hand. So that will be all for tonight. I appreciate you guys for participating and I wish you all a wonderful night. Uh, wonderful night and profitable